Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Tuesday, January 11th, 2022, and what a day it was. Not because the markets rallied today, and again, we're up 0.7%, not exactly a monster move, but a solid move, but bottom line is one of the best days in terms of taking profits we have had in quite some time. I love days like this, folks. All right, 11.4% on Affirm, 10.37% on SE, then also 13.69% on TDOC, 12.4% on SQ, and 10.28% on Peloton. Beautiful day, folks. Enjoy it. Not every day is like this. And again, I love how the beginning of the year is starting out just like last year with lots of profits. And let's keep on rocking and rolling, all right? So again, notice how yesterday I did a lot of buying, all right? Did a lot of buying, and really over the last week or so, you could say that I was doing some, whether it was Peloton or other things. And the bottom line is, it was because there was blood in the streets in a lot of these names, especially yesterday, and that has to be when you step up. And the beautiful thing about it is, when you use charts, you're not swayed by emotion. All right, yesterday when we were selling off early in the day, it was a nasty sell-off. All right, there was definitely fear out there amongst investors, amongst analysts, amongst talking heads. And the bottom line is, if you looked at the charts, not only did the S&P hit the low end of that upsloping channel, but the Qs hit some key support, and we know by the end of the day they recovered inside of their channel. And then individually, we knew Peloton was at support, SE was at support, Square was at support. I mean, there was just countless levels of support tagged. So again, taking the emotion out of it allows you to think clearly, not get swayed by emotion, and that enables more profits. All right, bottom line is, beautiful rally today. A little bit of chop early in the day. The market was digesting that late day move to the upside. And again, that's exactly what was going on, right? So you could see from the low, which was late morning yesterday, to the end of the day, we were basically straight up, right? And then today, we opened and sold off and chopped sideways for really about an hour, hour and a half, which was digesting this move to the upside. Once it was digested, the markets could grind higher. Also, notice the time of day, middle of the day. Look at the volume in the middle of the day that allowed for this float up. Just minuscule candles of volume that you almost can't see. That always favors the upside, and sure enough, the markets did not disappoint. Now, into the end of the day, you are seeing a little bit of profit taking. You can see a little bit of a minor resistance level right here as well. I'm not necessarily in the camp that thinks the markets can't go up a little bit higher, but I am in the camp that thinks that eventually the markets are going to roll over again. They are eventually going to take out the channel and break to the downside. And one of the things you could make a case for is if you go to the daily chart here. So here on the daily spiders chart, we did kiss that low end of the channel, right? So again, we got the bounce yesterday. We got the continued rally today. I think the spiders could at least go up to about 471, 470.75. Basically, this high right here, that'll be your first level of resistance. But what's more interesting to me is on the QQQ chart, right? So if you look at the last hit of the channel, what was it? It was a perfect hit, right? Basically right to that trend line. We then went to the high end. Now, if you look at yesterday, yes, we recovered. And yes, we closed back above the channel lower trend line, but this was the biggest pierce yet on the Qs. And what that tells me when you're kind of analyzing it is that there's more weakness there, all right? So here, the buyers swooped in and they had no problem right at the line lifting it back up. Now, yes, it bounced, but you went lower. There was more selling pressure. There was more fear there. There was more issues there. And again, it still bounced, but again, it's a pierce, a big pierce of the line versus over here where we basically went to it. So again, to me, I look at that and I say, okay, we're starting to see weakness developing. All right. Remember, bear markets don't start overnight and just cause a market to crash, right? If you look at even 2000, when the markets were topping, there was a lot of sideways chop before the markets took a massive dump. All right. And even in 2007, going into 2008, there was a period where the markets went sideways. The other thing you should point out here, or I should point out, is that if you look at the choppiness here, right? So this was very defined, right? Up, sideways consolidation, up, pullback, up. And then once you get up here and you had this big reversal candle, right? This big top right here, reversal top. All right, number one, that was the cycle high. That was the last cycle high we had, folks, which is remarkable that it has still stood the test of time on the Qs. The spiders, it went above, but the Qs never negated their last cycle high. All right, but number one is look at the price action since then. Here you had a dip, it recovered. But again, it didn't make a higher high. Here it had a dip. It did make a slightly higher high than here, but it never took out this high. And then look at how quickly it rolled over, making a lower low. Low, lower low, lower low. So again, the point of me pointing this out is to showcase to you that the chart is essentially the strength is deteriorating. All right, markets again aren't down huge. We're not in a bear market per se, but there's no doubt that you are seeing deteriorating, charts by making lower lows, lower highs, choppy sideways action. All right. So that's that, folks. Again, good price action there on the Qs. If we flip over to the IWM, let's see what that has. Good bounce on the IWM. Again, nothing really to write home about. You still have this is resistance up here. This is support down here. And again, we had a little bit of a drop recovery yesterday and then a little bit of a move up. But again, 0.9% is not a big move for the Russell. The Russell usually is the best performer. And part of that is honestly the financials are stalling today a little bit because yields are pulling back a shade. So again, I think that's why technology is leading too. If you go to the Qs, right, Qs are up 1.4% versus the S&P. The Spider's up 0.83% right now, right? So again, technology is leading. Why? And why did technology lag? Well, technology was lagging the last few days because yields were going up. Now yields are pulling back a little bit. Technology is leading. I mean, that's really all it is when you look at the underlying factors there. Okay. Let's go to Bitcoin's chart. Bitcoin is making a move. Again, you guys know my analysis has said that we are due for a Bitcoin bounce. So let's touch base on it. I have Dogecoin up right now. I was doing analysis on this just previously. But let's take a look at Bitcoin. Bitcoin again pushing up here. You could see trading at 42,780. Again, you had a little bit of a short-term bottoming tail yesterday. Good reversal yesterday. And again, the most important thing on this was the support level that was tagged here. So again, you can see right here, you draw this, and I don't know why my line is getting all wacky on me. I apologize for that. But if we draw a trend line right across here, you can see that support line right there. That was tagged there. Now it's been hammered over here. So again, you have to respect it, but still you should get some sort of bounce. I still have it penciled in to go back to about 46,000, 45,800. We're already decently towards that. We're about 50% towards that target already. We'll have to see if it gets there in the next 24 hours, 48 hours or so into the midweek period. Okay, so again, that's just your Bitcoin update. Good little bounce. The alts are getting bounces. Ether, Ethereum, the rest, Solana, they're all getting little bounces. Notice again the bounces coordinated with the stock market bouncing. I've said this many times over that, right now, crypto trades with the stocks. Now, eventually, I think crypto will trade, or at least Bitcoin will trade sometimes inverse to stocks, meaning that it becomes more of a digital gold, but right now with leverage and money in the system, it's absolutely gets sold on fear, just like the stock market and vice versa. Okay, next up, let's take a look at the GLD, speaking of gold chart, and gold having a beautiful day. Look at this move up today on gold, loving it, folks, big push up on gold. Now, granted, we're still stuck within this channel, right? I shouldn't call it a channel, it's a wedge pattern, technically. All right, and by the way, there's the stock market closing there. We just got the close on the day. We can check back in a minute on the S&P 500. But again, beautiful move up on gold. Loving it. That still doesn't matter at this stage. I mean, it's good to see strength, but we want to see this trend line break. We want to see this trend line break to the upside. If that can happen, that's where you start getting big upside potential. One other trend line I do want us to watch for a short term would be right here. It's basically the same line, though. See this? So this line from this pivot to this high, it actually merges with that. So what that tells you is that that is your spot. I mean, whether you test it tomorrow, whether you test it in a week or a month or a year, that is your level as of now with those two lines. Now, they will diverge over time, but my guess is we're probably in the next couple weeks, we're going to test that trend line, those trend lines, I should say. And then the big question is, does it break? Do we break to the upside? How does it play? All right, pretty cool stuff, though. Silver today, good little move on silver. It filled this little gap on the SLV. So again, nice little move up on silver. Silver's going to have resistance now right up here. If it gets through there, you got gap window right there, or gap fill right up there as well. So again, should be interesting to watch. Right now, again, this chart on the longer term basis is still choppy sideways and overall longer term bullish. But shorter term, it's a little bit more of a mixed chart, which makes sense considering the industrial side of silver in this day and age with, how much is COVID impacting the economy, what happens when the Fed pulls back on stimulus, all those type of things can influence the industrial side of silver. Now, oil, big move on oil today, folks. Now, you did see what I did. I did add to my SCO. That's the beauty of starting with a very small position. You have to do that with oil, in my opinion, because it's really a weird commodity in that respect. We're now watching this pivot high, this double top. If that hits, that's going to be significant resistance. We'll watch tomorrow to see. If it takes out that high, then technically you have a short-term higher high. That would be short-term bullish, but I do want to point out that the chart from this low is now quite extended. And again, that to me, that would mean that potentially you could pierce it and then start to see a pullback. So let's just take it one day at a time on oil. Obviously, I didn't think it was going to make a move like this to the upside, but we have to roll with it. That's the way charts are. Again, probabilities are probabilities. So every time you take a technical setup, you aim for, at least I aim for, and I see that my track record over years and years and decades at this point is about 80% success rate on swing trading, which means 2 out of every 10 won't work out versus the other 8, which is okay. That's just the nature of the beast. We got to roll with it. And again, you can see from all the winners today that that's just, one might not, but then the others do. And that's, again, how you have to be ready for it to be. All right, so again, watch that double top on oil again right there. We'll see again if it continues up. My guess is the Biden administration is going to do their best to kind of try to push oil back down if it starts taking out the recent highs, as again, it does hurt the consumer, and it is basically like a new tax, especially with the midterms coming up. There's going to be pressure on oil to push it back down, right? There's going to be, I don't know whether it's strategic reserves or other things going on, but you will see, especially if it gets towards that 90 or 100 level, that certainly would be bad press going into the midterms in November. All right, you guys have a wonderful rest of your day. One final check on the spiders here. The SPY closing looks like it closed right around the highs of the day, so up about 0.9%, which is kind of right around the ranges it was trading for the last hour or so. And again, that's where we have it at the close. Have a wonderful rest of the day. By the way, great day again on Chinese stocks. Love to see the continued momentum there. Hopefully it continues. Have a good one.